The next panel is going to be on co-creating enabling policies. So ladies and gentlemen, please help me welcome Sarah Muyonga, Public Policy Manager, East and Horn of Africa, Meta. Makofi tafadhali. Oscar Otieno, Senior Deputy Data Commissioner, Compliance Investigation and Enforcement at the Office of the Director of ODPC, and Kennedy Kachwanya, Chairman, Bloggers Association of Kenya. Makofi tafadhali. And we also have Nixon Omondi, Chief Manager, Digital Economy and Tax at KRA. Yoyo mumefikiwa. Mumefikiwa. Karibu sana. Makofi KRA bwana. Wasitoke hapa akisema tuna jam.
Let's just start by seeding some questions. Just two questions. Hata wajiongea kwanza, what question would you have for the panelists as we are waiting for the seat? One question that you think before we start the conversation.
Oh, I'm Immaculate Akinya again. When you are introducing the panelists, I heard there is someone who is in the Bloggers Association of Kenya.
Yes.
So a question to him, like as someone who's planning to start a blog, like what are some of the things that you need to start? Maybe like platforms, like what you need to know, because
okay.
I know nothing about blogging. I was just a lecturer is the one who advised me, because I'm very passionate about economics. So the lecturer advised me to start an economics blog, and I know nothing about blogging. So I have just been doing research.
Good.
Yeah.
So that question will be planted there. And I'll start with actually Kachwana. Why don't you start by answering her question? Where does she start, first of all, as a imminent or emerging blogger? Where does she start?
And I'm glad that within the university structures, lecturers are advising people to start blogs, because at the point where we are discussing policies, especially things surrounding how digital economy works in the country, and where we are now, most young people don't have jobs. Even people who are coming from university with degrees and PhDs, there's no available jobs. And digital economy for the young people help a lot now. And people from the government would attest to this. They talk about creating jobs, but the digital space is where the jobs are now coming from. Now, how do you start? If you are a beginner, of course, most of the time you might not have resources, because you need, in ideal situation, you need money. Like you need to register a domain. A domain is, now when you see a website, so let's say you see a website called meta.com or kra.or.ke or something, or kachwanya.com. Now, that name itself is the domain. The name, that is the unique identifier of a website. So the name is the domain. Then you need money for hosting. So at a starting stage, that would be probably around 3 to 4K to do that. But if you are starting, maybe you don't even have that, because you need to pay that yearly. When you're starting, you may not have that. So you can start from a free version. For example, WordPress. There is a free version of WordPress that you can register on WordPress, and then you start blogging.
Speaking of, when you start your digital platform, of course, you start collecting data. Explain to us, like we are Senator, oh sorry, I almost said her name. Explain for us, as class 5 students, who is a data controller? And at what point do a creator become a data controller, and what should they look out for?
Hello, thank you. By way of introduction, my name is Oscar Otieno, and I work for Office of the Data Protection Commission. So it's true, the way you said it, the moment you start maybe blogging, creating content and all that, then you start collecting personal data. Because I want to believe it is not all about your data that you will be doing. You will not be creating content about yourself. So you'll be going out collecting data on other people. So that therefore now makes you a data controller. So maybe, as you say, not a senator, but as class 5, as class 5, maybe students, just by way of definition, a data controller legally is that person, either legal, a legal person or a natural person that collects, processes personal data of others, and then you determine how you will use that data. For example, KRA will collect your data for purposes of tax assessment and maybe banks for purposes of credit scoring and all that. So for content creators, you will be collecting data for purposes of creating those contents, maybe for commercial purposes and all that. So that makes you now a data controller. Maybe most of you being in the university and you're starting to create content, taking it out there for commercial purposes. If you are making any revenue that is less than 5 million annually, and you know, legally the word and or is really very important, and you have less than 10 employees, then you are exempted, which means that the government is also trying to nurture and provide a conducive environment for you to operate in. So if you are that one solo guy, or you get that gig and now you need to go and get a cameraman, so you are only 2 people and you are making more than 10 million, still you don't need to register with the Office of the Data Protection Commission, because the exemption is earned. You make more than 5 million and more than 10 employees. So you may operate within that space, but the moment you hit more than 5 million a year annual, and you employ your 11th employee, then now there are obligations under the Data Protection Act. For example, now we want to know who you are, why are you collecting this data, and that is by form of registration. Where are you taking this data? Because we do understand that in this whole realm, you could be processing data, maybe using platforms like Meta, that will subsequently be transferring data outside Kenya. We want to know where are you taking these. For example, and the Kenya Data Protection Act is very strict on minors data. If you are coming up with your content and they're minors, anyone below 18 years, then you have a lot of obligations to protect that minor, because this minor cannot have maybe consent and all that kind of things, which I think we will discuss later here. So thank you.
And thank you for that. And it's good to know you've seen clubs who have paid a lot of money for using people's pictures and data. So it's becoming a very hot topic for us to understand. Now, when you go back to, before we get to the money side, we are going to the people who take the money. So let's just have a conversation. Like, what taxes do you apply on us? Before we tell you the money that you make, what taxes do you apply on us?
Thank you very much, and good afternoon.
Good afternoon.
Nixon Omondi from KRA, and our rapporteur. I don't know whether it was so coincidental. We were in primary school with Kennedy, we were at the university with Oscar. So it's so beautiful to go this stage, eh? Deep state. And Sarah is my very good friend. We coordinate a lot in terms of Meta and the taxation realm. Very quickly, as a content creator, you are accruing income. That is what the law tells us. When you accrue any income, then the law requires you to pay tax. The same way some of us who are employed, we are also accruing income, and that income is also taxed. It is an obligation upon all of us to pay our fair share of taxes. So as a content creator, if you are earning in the digital space, there are a number of taxes that might be applicable. And I hope economic students will understand what I'm talking about based on Adam Smith principles. That one, we have income tax. So income tax is lawyers try to give us a lot of tongue twisters, that income tax is a tax on income. Okay? And that is what it is. So if you are earning any income, then the law requires you to pay a tax on that income. And as a blogger, If you are an individual content creator, then you pay the tax based on certain bands that have been provided. We start from 10%. Unfortunately, it goes all the way up to 35%. Then if you are operating a company, and I liked some of the questions that came in earlier, that should you operate as a sole blogger or sole content creator, or should you operate as a company, or even as a partnership. So if you're operating as a company, the tax rate is 30%. But for sole, we call them sole traders, or we can say sole content creators, if you're earning anything below 24,000 in a month, that will be 288,000 in a year, you will not pay any tax. It is tax-free. So that is income tax. And for income tax, what you need to do, there are two regimes. Let me become a bit complex. There are two regimes. One regime is where you pay what we call turnover tax, where you simply pay a percentage of your income, which is currently at 1.5% on a monthly basis, and that's a final tax. The other regime is where you need to keep track of your expenses. At the end of the year, you compute how much did you earn, how much did you spend, and I'm happy that it was mentioned earlier, for you to get credit for any expenditure you've incurred, those expenditures must have gone through electronic invoice management system, ETIMS. But for this year, there's a window where you can lump them somewhere, even if they are not on ETIMS, and you still get to reduce how much you are going to pay. So you are going to pay tax based on the profit. That is the income minus expenditure that you have incurred. And I think this is also important. As business people, whether you're a blogger, any other content creator, keep track of your expenses. Try to keep proper books of records to account for what you are doing. So that is income tax. The other tax is VAT, but VAT aligns to what the deputy director has mentioned on the 5 million. You only charge VAT if you are registered. And you are only registrable on two accounts. You want, we call it voluntary, or you are making at least 5 million shillings in a year. So if you want the benefits that come with VAT, you can voluntarily register for VAT and charge. However, if you meet 5 million, it's now compulsory. So you simply register. And VAT, we say, is not your tax. It is a tax to the final consumer. So if you've been given maybe a brand promotion by EABL, what you'll do is you will invoice EABL, but you load the 16% VAT. Then if you have incurred any other VAT on camera, on transport, on accommodation, and all those other services, you also get to claim it back. So you pay VAT on a net basis. How much you charged EABL, for example, minus how much you also have been charged by your service providers. So I think that should be clear to that extent. And then we have another tax known as withholding tax. Withholding tax applies based on who you are supplying and who supplies you. So there are certain services, when you supply them to certain people, when those people or the customers pay you, they do a withholding. So EABL, for example, is required to withhold when you do a brand promotion to them. So when you pay them 1,000, when you charge them 1,000, they are required to withhold 5%. That 5% is not a final tax. It is an advance tax. So that when you declare your final income tax, you claim back the 5% that EABL, for example, had withheld. So I think that should be clear. On the same note, if you also hire a professional, for example, you want your books to be okayed by Kennedy, who is an expert in accounting. When you are paying him, you also withhold a 5%. To him, the 5% is not final as well. So when Kennedy is declaring his consultancy services income, they also get to claim the 5% back. So I want to keep it that short. But one more, In 2024, there was a law again that was introduced that now mandates Meta to deduct a 5% as they pay you. So Meta will deduct 5% on what we call content monetization. That 5% is not a final tax. It's an advance tax. So as you file your annual return, you claim back whatever Meta had deducted from the amounts that they were supposed to pay you. Thank you.
Thank you so much. I know that's a master class. You know, when you said one more, I was like, another one. The song that came to my mind was that, is it Recross? Another one. Anyway, Sarah, you know we like you. We like you so much, all of us. Let's talk money. At what point what are some of these monetization eligibility criteria that creators sometimes do not understand, especially on Meta products or any of the other Meta products? That's one that you can think of, because I know money, you can save the money question or the answer for the last one, so that we have a good taste after we've finished. But what are the other safe tools that also we can think of as creators? Because there was a question that was raised earlier on today about, you know, the comment section, and sometimes there are so many people who are either aggressive online to creators. What are some of the tools or things that you have at your disposal as Meta that you can, you know, share?
Hello. Okay. Thank you. Thank you so much, Morris, and my fellow panelists. I tell everybody, Nick is a very, very good taxman. When he finishes talking, you might give him all the money and you'll not dislike him. So it's always a pleasure to sit on a panel. My name is Sarah Muyonga. As earlier introduced, I'm a public policy manager at Meta. I don't want to make the assumption that you all know Meta is, but Meta is a technology company, a company that sort of is dedicated towards advancing technology that creates human connection. We want people to engage from a social perspective. We want people to thrive, build businesses, communicate, express themselves, and build those great connections. So we are the company that brings you what we call our family of apps. We have Facebook, we have Instagram, we have Threads, we have Messenger, we have WhatsApp, and beyond that, we're also investing a lot in technology, AI technology, where for those who are following, we are also investing around building large language models. A lot of this AI technology still drives our platforms. We've been doing this for a while, actually. I know there's the AI craze now, but AI has been part of how we are building the solutions. We are investing in frontier technology around wearables, smart glasses, Meta Quest, the games, and beyond that, just open AI technology, where we are allowing, I think it's really believing in how community builds together. So the open source approach also advances how creators, developers can build technology collectively. So in a nutshell, that's what the company does. Back to your question, and then of course in the social and allowing both businesses, creators, it's a space where creators use our platforms to express themselves, reach their audiences. And as I always like to say, every time we talk about creators, people think about the entertainment segment of creators. Creators is very wide. There are people who are farmers and creating content to speak to their audiences. There are people who are architects. Any kind of content that is connecting, whether you're a doctor, you're a creator in that space. I think every time I find a misconception of creators are comedians or creators are musicians. I think it's really wide. But beyond that, the question was around eligibility. I think 2 years ago now, and also through lots of efforts, because now you see we work a lot with government. There's a really strong belief around the digital economy and what it does. So even advocating for more products, access to products and product features that Meta has in different jurisdictions have almost become a key policy priority for the Kenyan government. So the Kenyan government, through His Excellency the President, had been advocating very hard, and I think also because the government engages with the creators, so we expanded creator monetization in Kenya back in 2024. So creators have been able to now monetize. Before, you were creating your content, but you would not be paid. Sorry. It was not monetized. But now monetization was expanded to Kenya. And shortly following that, I think because there were so many challenges that creators were having based on the different formats of creation. Like, I don't know if any of you here creates content, you might find we have Facebook stars, then we have something different kind of products, and so you have to keep following different strands. So globally, we are trying to unify the approach so that it becomes more simplified for a creator. Once your content is created, either in text, in video, like written, those are some of the other areas that we've tried to streamline. So starting last year, we started the rollout of a unified monetization, basically. So I think the fact that we remain dedicated, and I say this in many forums, we call it almost a flywheel. Creators, we care about creators because they also bring more people to the platforms. When more people come to the platform, more advertisers come to the platform. So it's almost, it becomes a more symbiotic kind of relationship. So we dedicate time to see how can we improve the experiences of creators in terms of what they can have on the platforms, from whether safety, and then how do they make revenue. In many cases, the revenue is a product of even advertisement at a great extent. So if you want to advertise something. So basically, there's a symbiotic relationship. We care for creators for that. So we've expanded the creator to a unified product that's now is eligible in Kenya. I'm always proud to say Kenya is one of the first markets across sub-Saharan Africa that they began the rollout of monetization. I'm thinking about moderation. So basically, many of the legacy programs we have are now put together. But back to eligibility, I think just very quickly, eligibility is really around the original content. I think at the moment with the unified program, a long time ago used to say you should have at least 5,000 followers, and I think we have, how do I call them, ambassadors who can tell us a lot more, but some of those things are being lowered the entry point is being lowered in that process. So number one is it's going to be an open program for everyone, but in many cases you'll see you can now monetize your content. You understand, based on the follow-up, if you're following the rules on Facebook. Some people are unable to monetize because you've been going against the community standards, for instance. You have what we call strikes. Maybe you've been posting abusive content. There's a lot. So your account has been marked. You will not be eligible for monetization, for instance. So some of those particular things, but a lot is also changing in flux at the moment. So I'd be happy to work with Teki to provide the most accurate in terms of what do I need for that eligibility, but it's still quite basic rate, yeah. So at least if you have at least up to 5,000 followers on Facebook, for instance, you should be eligible, and then you are there to the community standards and issues like that. I'll stop there because we can go, I mean, maybe in the next round I can talk a little bit more of the misconceptions, the policies, and yeah.
Okay. I want to involve you guys because I'm seeing like half the room is on the phone. So I want to get questions from you guys. Like any 3 questions, at least 1, 2, 3. Or if you don't want to ask, then just give 3 questions to one person. Anybody on this side? Any question that you have? Msiogope ataka kielewa kwa hapa. Uliza tu. There's one question there. Anyone here? So there's one question here. I don't know if you can get a mic. It's all right. One question, yeah? So the opportunity has gone. It's only one that we'll take for now, so that we go for lunch. Yeah, it's lunchtime.
All right. Thank you very much. My name is Kevin Wabungo. Sorry about that. My question goes to Nick. It's a two-part question. Number one is, I'm from Kevin Wabungo from Click It Media. We deal with email marketing for organizations. So my question is, you mentioned about tax, and I want to be clear, as creators, are we susceptible to corporate tax? Yes or no? And if it is yes, is there a possibility that the institution that you lead can help creators in such a way that, yes, we declare the corporate tax at the end of the year, but it is rebated so that we can be able to plow back that corporate tax into our trade, our craft, so that we can be able to exercise more or expand more to what Oscar was saying, grow the craft to hire more people or to expense more people for a couple of years through a moratorium, say 3 years, where we still declare and plow back, and then on the 4th year, then now we are able to remit more tax to you. I don't know what you feel about that.
I think that's the only question, so you can go ahead.
Okay, thank you very much. Allow me to stand. The nuances about taxes, my friend, is that corporate tax is just a name of tax to be paid by corporate bodies. Otherwise, the bigger name is income tax. So income tax, you can say, if you are an individual, you are paying personal income tax. But for a corporate body, companies and the like, they pay corporate tax. That's basically the divide. So if you are operating your media entity, and it's through a company, incorporated, you have the CR8 and the CR12 and all that, then we say you pay corporate tax. That is income minus expenditure. Any profits is then taxed at 30%. Okay? If you are an individual, for example, you have a business name, because if you use a business name, you are just an individual, a sole trader, then you are taxed, but your rate is not 30%. The rate is graduated from 10%, then you go to 20, then you go to 30. 10, 25, then 30. Then there's a 32.5% and 35%. So it's different, slightly different from the corporate, but the principle is the same. It will still be based on the profits that you have earned. If you don't want to be taxed on an annual basis, and your sales in a year is less than 25 million, you can opt for what we call turnover tax, where you pay 1.5% of your full turnover in a month, and then the following month by 20th you pay that amount, and that becomes your final tax. As to what can be done to plow back part of that tax back into the industry, and I hope you participated in the finance bill, or you are going to participate. We have up to 25th of this month to give our comments on the finance bill. I want to leave it for the industry to advocate. I think that's the space where Ken comes in, and you people, where you can lobby the government, because it has to be in law. KRA, we implement what is already in law. So if it can be brought in law, then now through the minister, they can see what to do towards the industry, to build up the industry. A few years ago, I think that must have been between 2018 all the way to 2022, there was a provision in law that a company that hires at least 10 interns would get a rebate of 150%. They would claim 150% of the expenditure on what they pay to the interns. It was basically to improve on those who leave the university, like our very good students, to get some industrial practical experience that can enable them then to be hired in proper jobs. But we realized that very few people were taking advantage of that incentive. Unfortunately, it was taken away somewhere in 2022, and we don't have it now. But we can make our proposals as an industry, as a people of Kenya, so that our voice is heard, and then the industry can be assisted through such rebates. But for now, we don't have that provision. Thank you.
Asanteni sana. Ladies and gentlemen, I said I'll not be the one who's standing between you and food. So we'll have to end it there. I know it's very premature, but the panelists will be hanging out around for a few minutes. So if you see them, please grab them and have a conversation. If you see the KRA team, also talk to them. They are shareholders in your business. They own 30% of your company. Because you pay them 30% every month, so they own your company. They own your company. So please talk to them so that they can set you straight. A round of applause to our panelists.